This is Robert Kraft, and I'm your host for the Planet MicroCap Showcase Virtual Investor Conference 2020. I'm really pleased to bring you our next panel. It's our cannabis panel, and it is titled Looking for Value and Opportunity in the Cannabis Industry. I'm really thankful to everybody who's joining us on this panel today, and it's being moderated by David Lachtman. He is the Managing Director at the Benchmark Company. So with that, David, take it away, my friend.
Good afternoon, and thanks for joining us. I've got three great panelists on with me today. First off, we have Brochstein from New Cannabis Ventures. I'll let Alan introduce himself, and then I'll make my way around to the other panelists.
Thank you. It's great to be part of this, David and Bobby. I'm Alan Brochstein. I run New Cannabis Ventures from Houston, Texas, and I also run 420 Investor, which I've been doing since 2013. New Cannabis Ventures, if you're not familiar with it, is the leading online source of news for the cannabis industry. I should mention that one of our co-panelists, Nick Kovacevich, his company, KushCo, is a client of ours, and I'll call out any relationships I have with any companies I mentioned by name, if that's the case. And 420 Investor is an online community of people interested in publicly traded cannabis stocks.
Thank you, Alan. All right, next up, we've got Nick Kovacevich, CEO of KushCo Holdings. The ticker symbol is KSHB. Benchmark's research department does cover the company. Take it away, Nick.
All right, thanks for having me, and thanks, Bobby, for putting this together. Excited to be on this panel. KushCo Holdings, we're a leading ancillary provider to the cannabis industry. So we're providing picks and shovels in the form of packaging, vape hardware, solvents such as butane and ethanol, and now services that we're offering primarily to the CBD industry. We work with great clients like Flower One, and we enjoy getting our news from the best source, which is New Cannabis Ventures, and of course, Benchmark providing a lot of coverage to companies like us in the space is exactly what we need as an industry to push forward with the Wall Street communities. So thank you for the work that you guys do.
Thanks, Nick. All right, next up is Kellen O'Keefe, Chief Strategy Officer from Flower One. The ticker symbol is FLOOF, Floof.
Thank you, David, and thank you everyone for being here and including me. I am the Chief Strategy Officer of Flower One. We are the largest cultivator and producer in the state of Nevada. We operate a 400,000 square foot greenhouse that is the top producing and one of the top producing or yielding facilities in North America, as well as a 55,000 square foot production facility and 25,000 square foot indoor cultivation facility. We are a seed to shelf. We provide turnkey services for brands looking to enter the market, as well as white label, and offer a number of bulk or wholesale products to the market of licensed producers as well. So wide variety of offerings at Flower One, and we are very excited to take what we have built in Nevada to new markets in the future.
Thanks, Kellen. All right, before we get into the questions and dialogue here, I'll just give a quick intro for myself. I'm David Lachtman, Managing Director at the Benchmark Company. I lead the firm's effort in cannabis, hemp, and CBD. Benchmark's a 32-year-old full-service investment bank with research, sales, trading, corporate finance, and M&A advisory. We focus on healthcare, technology, industrials, and of course, what we're all here for today, cannabis and hemp CBD industry. All right, so let's kick it off. We're going to get into some company-specific questions later in the panel, but right now I want to get into a couple big themes just kind of in general on the industry. I think a lot of people have been talking about. We'll throw the, I guess, first answer to this to Alan. So Alan, a couple things here. So how's cannabis legalization landscape going to change post-COVID-19, do you think? A lot of industry people I've been speaking to are calling for an extinction event, which has already begun due to lack of capital and money-losing business models. And now it's been exacerbated for a lot of companies out there. So I've also heard some people talk about how they think it will actually speed up the legalization process in the US coming out of it, because people are going to need more tax revenues and jurisdictions are going to be looking at things like that. So we would love to get your thoughts on that kind of overall post-COVID-19 theme.
Sure. So I think both those observations are correct. And if you just walk back 6 months ago, hard to believe, but the industry was already struggling with an almost 2-year bear market, and the vaping crisis hit, and that caught a lot of companies off guard. People had to make some quick decisions. I know Nick was one of them, and he raised some capital instantly when that happened. And we saw some states like Massachusetts push back against marijuana-related vaping, which was a short-term problem for many companies. And so the industry was already in a capital crunch, and COVID is an extremely dangerous situation for a lot of cannabis companies. And I think we've already seen some transactions that tell you the future. We've seen MedMen, for example, kind of succumb to the reality of Gotham is now really controlling it. And they signed, they were trying to step away from it, and then they've re-engaged Gotham, it appears, and they have terms that will eventually lead to a takeover of the company in terms of control. You've seen that also with Indus Holdings, which just brought in $15 million capital. So we're already seeing this play out. There are a whole bunch of companies in Canada where there's way too many overall licensed producers as well as publicly traded ones. So I think it's pretty easy to see that in the very short term, this was a positive on the consumption side as there was hoarding, but it's going to be very problematic. The black market wins, unfortunately, in the short term until social distancing is no longer required, or until we return to normalcy. So we're going to have a rough time, and raising capital just got rougher. So I've been telling investors to be very selective in who they buy and when they buy. And I will go so far as to say almost every single cannabis company needs to raise capital. The two public traded companies on this panel have recently announced capital raises, KushCo Equity and Flower One Debt. But the future is going to be brighter for those that survive, in my view, as you were alluding to. Legalization, coming into this year, I thought that was going to be a major driver. We saw Illinois legalize through the legislative process. It implemented pretty much flawlessly at the beginning of the year. And I thought it was going to inspire other states like New York, for example, and maybe even some nearby states to get on board. And unfortunately, this has been deferred, but I think it's extremely likely now that once these legislators are past some of their short-term challenges of dealing with the crisis, they're going to look at their budgets, they're going to look at their unemployment rates, and cannabis legalization will be seen as part of the solution. So investors need to understand that there will be some winners among the publicly traded companies, a few for sure, and then also some private companies for those private investors out there. They're sitting in the wings. We've already seen some reverse mergers kind of take place where some failed business models, the companies have given up basically, and they're offering their vehicle to other parties. So we're going to see more of that. So long story short, it is a real problem. Investors need to be very careful about with whom they invest and when they invest, be very cognizant of the capital raising cycle, and then also understand that those that can survive this will likely thrive for years to come.
Okay, thanks, Alan. So with respect to both of our other panelists, Nick and Kellen, I mean, you both just been mentioned as companies that recently raised capital. So Kellen, can you tell us a little bit about your position, the decisions you guys made on that, and add a little bit more on this topic that Alan just briefed us
on? Sure. For us, it's been about execution and fundamentally executing in Nevada before we look to do anything much larger and expand beyond Nevada. So for us, focusing on being cash flow positive in Nevada is a priority for the organization. And we were well on track to do that. Where and how COVID will affect that is something that we're working very, very closely on. But we, as a business, fundamentally believe that have a capital strategy and not to invest, not to raise more capital than you need. And we think, I think it's very obvious, and we've seen the downfalls that have come from businesses that have not formed a sound capital strategy. And I believe that, you know, at Flower One, we're trying to make respect shareholder value and create value, and make sure that we're building a strategy and utilizing all of the various capital sources available to us, whether that be debt, equity, real estate, or sale leaseback financing. All of the above can create a much more sound capital strategy if used wisely and prudently. So I think that's the importance for us, is to make sure that you can see in this industry can come in many, many forms. So for us, it is about the terms and making sure they have the same long-term vision for the company that we do.
Very good. All right, Nick, please join in here and give us your thoughts.
Yeah, great points from both Alan and Kellen. And I think, you know, I would echo what Alan is saying about the shakeout that's coming. We're going to see a lot of folks go out of business, or, you know, do some of these merger deals, which I think will be good for the industry. Putting companies together to get size and scale and stability, I think, is important. So you're going to see more companies look to come together during this crisis. I think, you know, look, the underlying market is continuing to hum. I think that's the biggest disconnect that we see and we talk about all the time, is the difference between what's happening with companies and their capital structure and their investor support versus what's actually happening with consumption in the market. Consumption is very strong and only getting stronger. And I would actually differ a little bit from Alan, and I wrote a Forbes article that came out today saying that coronavirus could actually help position the legal market against the illicit or black market. So I'm taking an optimistic view there, but it's too early to tell. And I think, you know, the disconnect is getting to this point has got to get figured out. And that's where I think most of us are also agreeing in that companies that survive this downturn in capital will come out the other side in a really strong position, both in terms of market share and investor appetite. So eventually it will catch up, and there will be some really great companies that are fully supported across the board. Unfortunately, I think it will take some regulatory change at the federal level. And so I think the biggest thing right now for cannabis companies is surviving the COVID-19 investor capital crunch that's happening to cannabis companies, and pushing through and getting to where we see some federal reprieve. And November is going to be big. We know the Senate has blocked every major initiative that has come out of the House. And I think any president would really sign a fair cannabis bill if it gets to their desk. Can't get to their desk if it can't get through the Senate. So let's see what happens in November with the Senate. That will be a big sign in terms of how quickly we could get that federal reprieve that's much needed for the industry.
Hey, David, can I just clarify something? So I was saying that the black market wins in the very short term because a lot of states don't have the capability of doing delivery. And even if they do, a lot of the companies aren't there yet. So there's just this interim period where I think some companies may take some hits to sales just in the short term. I wasn't talking about the long term.
Yeah, good point.
And that's a great point, Alan, because my argument is going to be that, yeah, during the short term, they are disadvantaged with delivery, but this is forcing states to allow delivery. It's also forcing companies to build their delivery. And I think that could be a secret weapon against this illicit market that many legal states haven't had at their disposal up to this point.
I mean, that's a great point, because if you think about it, everybody likes to buy on Amazon, right? Or online anyway. And this has been a big problem for the industry. And a lot of states have been very conservative. But the biggest competitor has not online, but on phone delivery. And, you know, the cannabis industry needs to be able to compete better. And, you know, where all you guys are out in California, you have all these places that won't even let dispensaries open. So get the delivery going.
Well, and in the traditional sense, who was your cannabis dealer? How did people buy cannabis?
Yeah.
I mean, it was delivery from a dealer if you're talking about the black market. So we need to focus on legal delivery now. That's really a key part of the business. So another aspect of where this theme's going, let's talk a little bit about the capital markets. And, you know, they've obviously, it's shifted, it's gotten very tight. In some cases, they're just closed. You know, I think the question now is we should answer for people here is how are the businesses pivoting and adjusting? And, you know, are we going to see more specialization versus the vertically integrated MSO model that has arguably spread many companies way too thin in terms of capital and resources? And, you know, I won't name specifics, but, you know, we know some of the poster children for this. They're running around, spending lots of money, buying up assets, overpriced, planting flags in every state possible, in generating, you know, barely any revenue and, you know, yet to be, you know, no EBITDA, no cash flows. And so a lot of it looks like wasted money. So, you know, curious, Kellen, let's start with you, because you and I had actually talked about this the other day. You know, what do you think about this theme of specialization versus trying to be vertically integrated and doing everything from seed to sale to retail to manufacturing and extraction?
Well, first, I think it's important to note, I often refer to vertical integration as the curse of vertical integration, because it wasn't something that was often set out or chosen, but rather required by the regulations that were created in the eastern states. So if you look at Florida, if you look at New York, these are incredible cannabis markets. And those licenses, in my opinion, are very, very valuable assets, even today. And so I believe that those state regulatory programs, by requiring vertical integration, actually created the problem that we see today by a number of businesses that have had no choice but to pursue this vertical integration. In the future, I believe cannabis will look a lot like many other industries, where you have specialized skill sets, and those that are experts in cultivation are going to be very different from the type of people that are experts in manufacturing or experts in delivery or brand creators. All of these things are very, very different, and it will be very difficult for any single platform that we see today to specialize and excel in all of these areas. So for those reasons, I believe you will start to see companies that emerge like Flower One that have DNA and roots in large-scale agriculture, large-scale greenhouse design and operation. These are things that are not easy for cannabis entrepreneurs, real estate to be able to just piecemeal together. And that's something that I can say I've learned through experience, and not only my own experience, but those of many, many companies in the industry that have tried and failed to do the same thing.
Yeah, good point. So Nick, I'd like you to step in next and answer, because you work with so many different companies in the industry, probably more than any other company out there that we can point to. So what are you seeing with respect to specialization and, you know, companies not trying to do every single part of the process?
It's happening across the board, and we're doing the same. We announced a recent strategic pivot. We have typically serviced thousands of cannabis customers and CBD customers, and now we're actually narrowing our scope, and we're focused on really just a couple hundred customers that we believe as having, you know, strong balance sheets, you know, clear path to survive this downturn, and path to growth, right? And, you know, it's interesting meeting some of these big MSOs, and, you know, a few of our customers are highly successful, and they've got opportunity all over the place. I mean, literally dots on a map that they can add value if they spend a little bit of money and build out. And their path this year is a fraction of what is on the board, because they just don't have the capital. So you're going to see far less CapEx spending, and you know, that involves vertical integration, right? If you can avoid putting a ton of money into a cultivation facility or processing facility and still get access to distribution in that market, why would you put your dollars there, right? So I think companies are going to be smarter. We recently saw Canopy Growth, the largest, arguably the largest, you know, public player, just pull out of so many markets across the globe, including hemp operations in New York. And quoting the same thing that we're all saying here: time to focus on operations that can be profitable. And we know that, you know, a couple years ago, there was so much investor appetite that, you know, the calling was really to grow, grow, grow and grab market share. That's changed, and companies are pivoting as quick as possible. You know, we pivoted very quickly, and arguably not even quick enough, right, to this new model, because it just changed so drastically overnight. Companies are having to pivot. And I think two things really sum up this more than anything. You mentioned the capital markets crunch. Tilray recently did a financing right when the COVID-19 pandemic hit. And, the terms were, 20% discount to market with 100% warrant coverage, and the warrants were ratchet down warrants. Compare that to the terms that Tilray was getting, a year ago when they just gone public. They were the darling of the industry, and it's a highly liquid NASDAQ stock. So if you're a company that's traded on the OTC or the CSE, you're not Tilray, what terms are you going to get right now, right? So people have to think, and we're taking this mentality, that why go after equity capital at all right now? Let's focus on our business, cutting our costs and getting profitable so that we can self-sustain throughout this. And there will come a time, as I mentioned before, where we'll see this thing turn and deals will come back into play that are palatable and favorable to investors. And there'll be more money to raise, but that's not now. And it's probably not for the next 6 months or maybe even 12 months. And companies need to prepare for that.
Well, Alan, love to have you join in here. I don't think there's anybody I know that tracks more companies in the space than you do. So I'd love to hear your thoughts.
Yeah, so kind of two lines of thinking here. And the first one is, this is a good point. The curse of vertical integration is very well stated. And, I think we've heard from a lot of companies, it's kind of silly to, as Kellen was saying, to expect a company to be able to grow well and to be able to make good branded products and to run stores. This is crazy. And so, as Kellen said, Florida is a great market, but there's some companies there that are really struggling because they can't get their own supply. Wouldn't it be great if Kellen and Flower One were operating in Florida? It would really solve a lot of problems. And so, we were speaking earlier about more legalization. I think take it to the next level, we'll probably see regulators get a little smarter about the way they do things, because the regulators, for the most part, they want these cannabis programs to succeed. And, there's a back and forth between the industry and the regulators. And it seems like the ball's going to be in the court of the regulators to move things forward now. As it relates to the capital situation, you were saying, David, that a lot of these companies, well, let's start in Canada. They threw all this money at these new LPs and just kept throwing it at them. Oh, you're opening in Denmark? Here's another 100 million. Oh, Africa, awesome. Here's another 50 million. And so I think that's a much more complex situation than what's been going in the United States, where nobody ever threw money at anybody, really. Maybe for a very brief period of time at the end of 2018, when Acreage and Cresco and Cureleaf and Harvest all went public, there was a little bit of money thrown, but it was like one and done for the most part. So these companies in the United States have been trying to plant a flag. And before COVID even hit, they were all starting to point to, well, yeah, we're in all these markets now, but we're not expanding anymore. This is before COVID-19. Now that COVID-19 has hit, take Ianthus, which is a client of ours at New Cannabis Ventures, to disclose for Bobby. They had a very shocking announcement earlier, I guess it was earlier this month, that they defaulted on their debt, and they could pay it if they want to, but they strategically realized that they're swimming upstream, which is hard to do for a protracted period of time. Especially if you can catch COVID while you're swimming. So, when I think about a company like Ianthus, and there's a bunch of them out there that are, have operations in 8, 9, 10 different states, it's going to be really interesting to see the solution here. They have debt. All these MSOs have debt and sale leasebacks. Flower One, you're in that camp too. So it's getting a little harder to navigate because you already have multiple investor stakeholders. And so in the case of Ianthus, which we were talking about, they have two different creditors, Gotham and Oasis, and they have different motives and all that, and it makes it more complex. But without going into how I think it's going to play out, you can just imagine an 8-state or 9-state MSO has got to quickly pare it down because they may be losing money in some states. So I think a lot of these MSOs, I'm not speaking about Ianthus specifically, a lot of them are going to want to tell their investors on the calls in May that they're going to exit their money-losing operations. Who's going to buy those?
But then that's what I was going to ask you next,
Yeah.
right? So what happens to all these assets?
So I was just speaking to a investment banker type yesterday who wants to get his, like you, David, who's, you know, in the business, has a lot of excess capacity. I'm not saying you have excess capacity, but a lot of investment banks right now have a lot of excess capacity for the next few months. There are a lot of investors out there that could buy projects. There are a lot of companies that need to sell assets. There's not a real easy way to do it. The U.S. cannabis industry isn't very efficient. I'm hoping New Cannabis Ventures can actually play a role in highlighting some of these assets that might be for sale. We can't work for a success fee or anything like that, but we're an advertising company. And I think what's going to happen, without naming names, I think some of these overstretched MSOs are going to need to sell off their better assets to stay alive and then work on selling off those older ones. I think that it's easiest to sell. Let's take the Florida example without referring to any specific company. You know, licenses in Florida were extremely valuable in the early days. And, you know, now it's a lot more questionable. We've seen, for instance, Cresco Labs, client of New Cannabis Ventures, walk away from a deal to earlier this year or late last year to buy a very productive Florida operator. And we saw, I can't remember if Green Growth Brands closed their deal or not. I think they might have, but they're already, okay, here's another example. SOL Global, CanCure, now they're putting it into a new vehicle. These licenses were deemed very valuable. Then there was a lot of question, too many of them and too much capital. It wasn't how much a license costs, it's how much capital you need to get it to the goal line, really. So yeah. I think Florida, there are a few MSOs that aren't in Florida. Florida's a great market, and they're gonna probably try to reach out to some of these operators that have operations up and going that are probably decent operations, and it'll keep some of these other MSOs alive. That's the way I see it playing out, David.
Yeah, good points. So let's go into a little more company-specific focus. I think we'll pitch the first one over to Kellen because we've all known Flower One to really be an innovator and I think an industry leader in its approach to brand partnerships. And I see them as kind of the gateway access point to Las Vegas, which is this 24/7, 365-day, all year long, all night long, all day long market where if you want to build a brand, you've got international clientele there coming in and out all the time. Obviously, the place is shut down right now. We would have all been there next week. Just for everyone listening to this, that's why we're doing this today. But Kellen, would love to hear, your guys' approach. You got some innovative new products coming out that you think are going to be, in the post-COVID-19 that are really going to, rock the market there and, be trend-setting new products.
Sure. Thank you, David. We're extremely proud of our brand portfolio of brand partners. We think we've got some industry leaders when it comes to each of the categories we work with. Old Pal is an incredible brand on the value well for us. We have a leading edible brand in Kiva. We have one of the most powerful brands in all of cannabis in the world famous lifestyle brand and genetics company in Cookies. In California in Heavy Hitters. So all of this portfolio, we're continuing to launch as we roll out new SKUs every month. And we are thrilled about what the opportunity is to capture additional market share and continue to grow the business as we roll out more and more of these products. Value has always been that those that offer the best quality at the lowest possible price points are going to win in this industry. And we've seen a lot of evidence of that over multiple markets. So that's something that we want production and capabilities there to match that to leading brands to offer that value back to consumers. And we think that's going to be very important for the future of cannabis in every market. And so we're very excited to take the portfolio that we have from Nevada and begin to look at other markets here in the near future.
So I agree with you on the quality and price point. Just curious, how do you think the word spreads? How do people find out? Because there's you know, do you think it's mostly word of mouth? I mean, there's so many limitations on advertising and ways to really reach the consumer.
Well, I think there's a number of things that go into building a brand, right? And to be a real brand, you have to stand for something and mean something far beyond just the price point in which you offer your product. So I think there's those components of what a brand means and what it means to be a brand. And of course, you know, conventionally speaking, to be a brand, you have to be able to charge a premium to that of a generic product. And you have to be able to have some form of loyalty that gets customers to come back and buy your product. What we've seen successful has been a number of different things. You know, a lot of people use influencers, social media. A lot of people use traditional kind of limited drop models where they have, you know, a number of hot products that are, you know, the strain or the flavor of the moment. There's a number of creative marketing approaches that are used in the industry. But I think if you take good fundamentally mean something, and then you bring in a quality product at the right price point, then you have a formula to really start to scale and deliver. And that's what we're trying to do, is build an ecosystem together with the right products at the right price point. And that's really the magical formula for success in this industry. It's really not that magic at all, but just an ecosystem that brings together the right parts.
Yeah, very good. Thanks, Kellen. I'm going to turn this one over to Nick. This is a KushCo specific question. I understand that KushCo announced a new strategic plan last week to align with financially stronger, more creditworthy customers, to right-size the organization, and really focus on accelerating the path to profitability. Would love to hear more about that.
Yeah, we're moving to this plan primarily because of two reasons, which we both discussed here. One being the fact that there is going to be a shakeout and a lot of companies are going to go out of business, and that's already happening. We're seeing it with credit that we've extended in terms of AR. We had to write down $9 million of bad debt last quarter because we'd extended a lot of credit to various customers, mainly in California, that are under capital crunch and simply just can't pay. So we don't want to continue to further get into that trouble when we know it's only going to get worse. So we're making the strategic decision to only extend credit to a smaller group of customers that we really feel comfortable and confident have the balance sheet and financial wherewithal and strategic plan to be able to do good business with KushCo and pay their bills. Secondly, we've talked a lot on here about the consolidation that's happening in the industry, and that, you know, companies that survive this downturn will end up being emerged as winners, and they should only get stronger. They should only be taking advantage of this opportunity to scoop up assets whose prices should be at all-time lows. And these are going to be the larger MSOs, Canadian LPs, and some private companies that have size and scale. Well, those are the customers we're going to focus on. We're going to double down our efforts there because the long-term benefit is going to be much greater, given that these are going to be the winners that are going to be consolidating and getting larger and more profitable. And then lastly, as a company, you know, we're a publicly traded company that's raised a lot of capital historically to be able to grow our business. And nobody's really focused on growth anymore. They're all focused on profitability. So being able to move to this plan actually allows us to accomplish what our shareholders and investors are looking for, which is sustained profitability and an economic model that makes sense given the current climate. And so we love the new strategic plan we're moving to. We think it is the right play and something that allows us to add more value to our business with far less costs, meaning we can get profitable at a rapid pace, which, you know, in this climate, I think is the complete right thing to do.
Very good. Thank you. So I think to kind of wrap us all up, we'll kick it over to Alan, and then we can all chime in. You know, it seems clear that a lot of companies in the sector, both public and private, are not going to be around 12 months from now. So, you know, it's interesting, though, when we think about there's still a tremendous growth opportunity in this industry. I don't think anybody doubts that. And especially if you see the numbers even going on through this COVID-19 crisis, I mean, I do know some brands here in California that are actually doing very well and still seeing record numbers. And I'm not talking about there was just a big upsurge, you know, those first couple days or weeks after, you know, the shutdown was announced or shelter in place orders. I'm talking about we're still seeing record weeks of orders, even through the, you know, the first half of April here. So it tells me that, yes, people are using more cannabis. And I have gone and, you know, visited some dispensaries here in Southern California just to see what's going on the last couple of weeks. Now, I've heard from the people inside, yeah, you know, some days are busy, some days aren't. But the day I was in there, it was packed. They're only letting 2 people in at a time, but they're setting everyone up just like you're waiting to go into Costco, 6 feet apart, waiting out front. There was pickup delivery orders going out the door. So, you know, it still looks like the industry is growing very nicely. So the question here is, I want everyone to weigh in on now, and you start before we finish up. How do you envision the survivors are going to share in this bigger pie? I mean, it's still growing. It's still good.
So I think Nick's restructuring that he just addressed really gives us the answer. I mean, Nick's figured it out, or Nick and his the rest of the people at KushCo, that the largest MSOs, they have access to capital. They are very close to, if not at, break-even cash flow already. And so of those 4, which just for the benefit of the listeners, I'll name them in revenue from the most recent quarter: TrueLeaf, Cureleaf, GTI, and then Cresco Labs. That's looking backwards. These 4 companies are likely to exceed the Canadian LPs in revenue. Their operating profits for some, or losses for the others, small losses, big profits. They have access to capital. They've all been able to access the debt market, which, you know, very few companies are able to do that on, especially on reasonable terms. They've all done sale leasebacks. So these are the companies that will be the last ones to fail. And they're the ones, as Nick said on his conference call, they pay their bills. So I think they're in a really good position to do in-market acquisitions. I think it's always hard to do a cannabis acquisition anyway. We saw a lot of companies try to go in Nevada, for example, and there was a local issue or, you know, state issue. They couldn't get the license transfers, and then market prices changed, things like that. So, you know, we've seen companies back off of these acquisitions in Nevada. But this is the case in a lot of states, and sometimes they don't let you hold more than 1 license, like in Florida, for example. So it's a little bit complex, and for the people out there that think that those 4 companies I mentioned are going to go on a buying spree, I don't think so. I think they'll do fill-in acquisitions. I think what they're going to do is, these are smart people at all 4 of these companies, and they know that every dollar they raise is 1 less dollar that their competitor is going to be able to raise. So I expect these companies to continue to you know, they understand cash is a weapon. Cash balances are a weapon. They're going to build their cash balances. They will pick up some distressed assets. I think the majority of the consolidation will, you know, some people are talking about these SPACs, and it would have to be one of the ones that listed in Canada. There may be a SPAC, Special Purpose Acquisition Corp, for those who aren't familiar, that come in, they're sitting there with lots of money, and they could come in and buy some distressed assets, or even a publicly traded company, from what I understand they could. But in any event, I think there's going to be a lot of opportunity for investors to buy assets on the cheap. I don't think that we're going to see the 4 large public companies do a lot of that, but they'll do in the specific markets where it makes sense, David.
Very good. Kellen or Nick, you have anything to add there? Okay, very good. Alan, I guess, you know, one other question I'd be interested to hear you weigh in on, because you keep your finger on the pulse of the industry very well. What do you think about this Canopy and Acreage merger, which was obviously announced, you know, almost going back a year ago? You know, do you hear they're working closely together behind the scenes? Is Acreage, you know, the Canopy pathway into the U.S. eventually? I mean, I think that one's always interesting to keep an eye on, just because Constellation is, you know, but behind Canopy, and everyone knows that that's, you know, just this massive, obviously, alcohol company.
Let me give a Bobby Kraft disclosure first. Canopy, I don't think I've said them yet. They're a client of New Cannabis Ventures. And I'm about to mention TerraSend. They are as well. And then a personal disclosure.
Everyone listening knows almost every company in the industry is a client.
No, that's not true. But yeah, so don't worry, Bobby. I've covered them all. But a personal disclosure. I've known Kevin Murphy for 31 years or something like that. The guy that runs Acreage. I'll just leave it at that. So I will say that what I'm about to tell you is speculation on my part, and I'm just going to be 100% just share facts and tell you that I'm speculating as well. And I don't really have a confirmed answer for a question that a lot of people would love the answer for. And the question again was, is Acreage the vehicle for Canopy? And I'm going to say no. I think that was I think that the current management, I do know that the current CEO of Canopy at the time, he was at Constellation as the CFO. He signed off on that. There's no doubt. But now David Klein's the CEO. He's calling all the shots. He must acknowledge that that was not a good idea. He must. I don't know that he does or doesn't. I'm saying he must. And for those that haven't been paying attention, there's a limit to the number of shares that Acreage is allowed to issue, and they're going to run out of money. And they announced a capital raise. They weren't able to raise as much money as they wanted. They're one of the ones that planted a flag everywhere. They're 10,000 miles wide, or however 5,000 miles wide, and a couple of inches deep. So they're in that disadvantaged category. And a secondary thing I would say is that Canopy was able to very cleverly, just very recently in March, to lend TerraSend 80.5 million Canadian at, get this, 6.1%. At, get this, for 9 years. Nick, you die for that, right? Or Kellen, you would too.
That sounds quite friendly, huh?
Yeah,
very
friendly. So
for this industry.
I don't think that I think Canopy would love to get into the United States. And let me step it back a little bit. There are 5 pretty large Canadian LPs. They were all saying the same thing. The United States, we're going to be there. We're going to be there big in CBD. Well, that was a fail, unfortunately. I don't know if they could have foreseen it or not, but CBD, hemp was legalized, but CBD's in FDA quandary right now. Nobody can move forward unless it's a topical. So you're not going to make money on topicals. You can talk about it all you want, but Kronos Group and it's ridiculous what they're saying they're doing, and now they've backed off. So Canopy, that was one of their vehicles as well. And I think Nick said earlier today they announced that they're not exiting, but they're not growing anymore. There's too much hemp. But anyway, they're not growing for now. They have enough hemp. So I think the fact that Canopy backed TerraSend with such friendly terms tells you that they legally can't just say, sorry, Acreage, deal's off. They paid $300 million to the Acreage shareholders. They are, from what I understand, contractually bound if cannabis becomes federally legal. Nick, turn your ears off. I don't want you to hear this because I know Nick disagrees. But I don't think cannabis is going to be federally legal for in maybe that whole time frame for that deal. I know Nick disagrees. We could have a whole nother panel debate about it. It's
on
so
legalization.
Complex. Yeah. So in any event, I think Canopy can't tell us the truth. I mean, yeah, they can't tell us the truth legally, but I don't think they're committed to Acreage that much.
Yeah. Well, at the very least, it looks like they may be committing to TerraSend with those friendly terms.
Well, Canopy has the best currency in the world right now, and they have the back-end Constellation, and they have to be careful. I think that I think the terms are, they can't go acquire TerraSend, for example. So, I don't want to say Acreage is going to disappear. It might, but if it doesn't, it's going to be complex. But if it disappears, if Acreage has to recapitalize and reform such that, they can't, and Canopy won't bless the additional shares, the deal's off. And I think Canopy, these are smart people at Constellation, and they want to be in the United States one day, why are they going to limit themselves the way they did on that other deal, which I didn't understand?
Yeah, very good.
If I could just add one thing, because I couldn't turn my ears off. I mean, today there's not a clear path to federal legalization, and that's why I mentioned at the onset of this. It's all about November. If November can clear a path, primarily with the Senate flipping,
Yeah.
then I think it will happen. And if not, I would have to agree with Alan that it might not happen within the 7.5-year time frame that deal called for. The other thing to note is, you know, Canopy has got a lot of tentacles in the U.S. They've got Canopy Rivers, they've got TerraSend, they've got acreage, and not to mention, as we've all been talking about, there's going to be a lot more distressed assets that they can scoop up. So I don't think they're married to any particular route. They've got some ideas of where it could probably go, but you know, look, thou who has cash right now is king, and they're backed by Constellation. They're going to be able to get into the U.S. In a lot of different ways when the time is right, if it comes here in the near term. So I don't think they're concerned. I think right now they're trying to make sure that they're not burning too much cash, and that's why they've halted some of these operations, which is a smart move. And as Alan says, they've got some really smart people running the company. They're going to be just fine. They've got a lot of irons in the fire, so they're going to find one way or another to be in the U.S. When the time is right.
I believe what's important to note is how quickly the landscape is changing in cannabis. You know, the players that are here today will look very different, and one that looks like they're in a horrible position today might be restructured and put into an amazing position tomorrow. As to echo Alan's points earlier, there are new private players emerging that are extremely well capitalized as maybe any MSO could even be today. And, you know, very talented groups that have learned from the mistakes of the pioneers and, you know, are very well positioned to be serious competitors. So I think, you know, it's very difficult to think about what the acquisition landscape is going to look like in 6 to 12 or 18 months. I am more optimistic about federal legalization than maybe some of my counter panelists, but I think, you know, hopefully we will see something shift at the federal level, even if it's just banking or some form of states' rights over the next few years or next couple of years. You know, given the current status or situation we face with COVID in our economy, I think the tax revenue that cannabis has been bringing in, and that you know, we've seen from states even that we didn't expect, like Colorado and others that are actually outpacing or outperforming the tax revenue that they've been able to generate. I think that, you know, states are going to take notice of this. Governors are going to take notice of this. As we've been deemed an essential business during this very, you know, unique time, I think that's going to help push things over the line. I hope.
Very good. Well, thanks all. I think we're getting into our time here where we're going to wrap up. All right, David Lachtman here. So also would like everyone to know that Benchmark does have a relationship with KushCo. We do cover them in the research department as far as Flower One. Kellen and I are friends. I do happen to personally own a few shares of the stock, but the firm does not have a relationship with it. Okay. So as far as getting more information, we're going to go around here and let everyone give you their websites. We'll start with Alan, then go to Nick, and then go to Kellen.
Sure. So if you're looking for the very best information about publicly traded stocks in the sector, www.420investor.com. That's my subscription site. I come very close, and it's for free, at www.newcannabisventures.com, which you can download the app, sign up for our weekly newsletter, a whole bunch of different ways to stay in the know.
Thank you all for tuning in and listening to our thoughts today. I am Nick Kovacevich, the CEO of KushCo Holdings. We're traded under the symbol KSHB. Our website is kushco.com, and I am active on Twitter, trying to be. Follow me at Nick Kovacevich. My lifelong goal is to get more Twitter followers than Alan Brochstein. I'm quite a ways away, so please help. And lastly, I'm also writing on Forbes. As I mentioned, just posted an article, and I'll be sharing. I shared it on LinkedIn as well. So connect with me, connect with KushCo, and stay safe out there during this pandemic.
Thank you, everyone, for joining. To my fellow panelists, some really great insights and information, as always. For everyone joining at home, hope you're staying safe out there and appreciate you tuning in on Flower One. You can go to flower1.com, spelled out O-N-E. Our ticker symbol is phone, F-O-N-E, on the CSE, and floof, L-O-O-F, on the OTC. Again, thank you everyone for tuning in, and stay safe out there.
Very good. So I'd like to thank Nick and Alan and Kellen for taking their valuable time today, and we got a lot of great insights. I'm sure everyone's going to learn a lot from this panel, and thank you, Bobby, for hosting. I'm David Lachtman. I'm going to sign off here. If you want more information on Benchmark, you can go to www.benchmarkcompany.com. Thanks very much.
Thank you all. I really appreciate you all doing this, and stay safe.